Hi, welcome to the market view for Tuesday, the 15th of April 2014. And starting off with the daily chart, we can see that yesterday the market was incredibly quiet. Prices moved lower to start off with, down to the 160. Let's have a look, 167 area, and moved higher during the afternoon. But you can see that hardly any movement in this market during yesterday's session. We don't even get 50 pips, which is the distance between these two lines. So very, very quiet. No doubt in part to the fact that we are heading for the Easter weekend holidays, as I mentioned in yesterday's market view. So let's have a quick look and see what happened inside of the 30-minute. We eventually got a signal in the afternoon, and the market, after filling the order, traded in a sideways range, then started to move higher. There's resistance over to the left. We've got the daily pivot line here as well. And the first sign of weakness in the up move is this red bar here. So as the market wasn't doing an awful lot, it was a case really of moving 50% below to reduce the risk of 34 pips to below this red bar. And as you will see, that takes you out at break even. So not a lot there, an awful long waiting for the trade, and then eventually being stopped out at break even as well. But that's not uncommon as we head into sort of a holiday weekend, whether it's Christmas, Easter, that type of event. So again, no surprise really that the market's in a very tight range on the overnight market as well, which you can see there. So we're still between this trading range, which is less than 50 pips for yesterday, which is quite amazing really. I mean, most days at least we get 50 or 60, but at the moment we're getting less simply because of the holiday weekend that is approaching. Let's have a look at the news, see what we've got out, see if anything will shake up the market today. We've got a CPI for the UK. You don't want to be in the market when this one comes out this morning. Forecast to drop again by 0.1% from 1.7 to 1.6. The RPI index also to drop from 2.7 to 2.5. So let's see what happens there. 10 a.m. we've got a couple from the Eurozone, sorry, just one from the Eurozone, the German ZEW economic sentiment. And then we've got the CPI from the US as well at 1:30 to again show that it's unchanged at 0.1 from the previous, which is absolute nonsense. It's been like that now for the last 2 years, and it's not true at all, because people are feeling the increase in prices on a personal basis, and yet the items that people are feeling these increases in are not taken into account. In fact, I think the CPI now for the US accounts literally for 1% of the foodstuffs that it used to. So again, no surprise really. Fiddle the figures and make it look as if there's no inflation, when actually there is a massive inflation bubble on the horizon with all of the printing of the funny money. Yellen is to speak at 1:45 as well. So just 15 minutes after the release of the CPI figures, Yellen is probably going to say something about these as well. So again, it'd be wise to just stay out of the market at this time. So that's about it really. There's been nothing on the 60 minutes since last week when we had the other trades, and again, we're just stuck in this sort of sideways range of 50 pips, which you can see very clearly there from yesterday. Right, well, that's it for this morning. Again, brief and to the point. And let's just, before we finish, let's just have a look. And let me just draw a few lines back on here for you just before we close, just in case the market is really excited and wakes up. To the upside, we've got this area here, 167.72 and 167.89 are the upside resistance areas, and of course the previous high which we've seen over here. I'll just drag that across for you as well, see if we can keep these on the chart. And I notice they've just disappeared, so let me just save these. And then on the downside, as the market's back at this level, we would have to draw the fib or first one from there to there, and this would be the downside target. Should the market move lower, if the inflation figures are worse than forecast, then at least we've got some sort of downside targets, which takes us basically to the 166.50 area there, if the market breaks through the 166.84. So that's it for the time being. Have a great day. All things being equal, I will see you in tomorrow's market view. As ever, thanks for your support and also for watching.